Oil has hit a 2019 high, reaching a peak of $68 a barrel as a decline in US crude and fuel stockpiles added to evidence of a tightening market. US sanctions against Iran and Venezuela have also reduced supply. Oil has rallied nearly 30% this year as OPEC and its allies curbed production and Venezuela's exports collapsed amidst the political turmoil enveloping the country. Record US output has hung over the market, but falling stockpiles in one of the world's biggest energy consumers suggest that the risk of a glut is reduced. Crude and refined products in storage fell by 10.2 million barrels last week, according to the Energy Information Administration's report. Total petroleum stockpiles were the lowest since December. Oil imports also slipped, another sign that OPEC cuts and US sanctions on Venezuela are impacting the market. The reason OPEC have been so keen to cut production was to try and support prices as they fell towards $50 a barrel in the fourth quarter of last year. US sanctions are removing more barrels from Iran and Venezuela. OPEC is now in its third year of curbing supply in order to defend crude prices. While this has helped bring about a 25% recovery in Brent this year, a price of $67 per barrel is below the price that most producers need to cover government spending. Saudi Arabia requires an estimated average oil price of $80 per barrel to fund plans for increased spending this year. The country's financial pressures are growing as Crown Prince Mohammed bin Salman pursues a radical overhaul to diversify the economy away from oil. The kingdom, who are the de facto leader of OPEC, said earlier this week that it would reduce output even more than the deal called for. Along with their OPEC partners, they have agreed to cut crude output by a joint 1.2 million barrels per day. On top of this, Russia is withholding supply to prop up prices. The nation's output has declined by 80,000 to 90,000 barrels per day from its previous level in October. US oil output continues to rise, with analysts expecting oil production to rise past 12 million barrels per day soon. However, these record outputs, including from the US shale industry, have led to doubts that prices can rise much further, despite OPEC's efforts. US energy firms have, however, reduced the number of oil rigs operating for a fourth week in a row, with drilling slowing to its lowest in nearly a year, prompting the government to cut crude output growth forecasts. Drillers cut one oil rig in the week to March 15th, bringing the total count down to 833, the lowest since April 2018. General Electric's Baker Hughes Energy Services firm stated in its closely followed report on Friday. Concerns about the health of the global economy have also been a factor, with a focus on trade talks between the US and China, who are also the world's top two oil consumers. Although crude oil use in China, the world's biggest importer, rose 6.1% in the first 2 months of 2019, compared to a year earlier, to a record 12.68 million barrels per day. The OPEC report urged members and allies such as Russia to be aware of the continued shared responsibility to avoid the relapse of the imbalance in the market.